What made headlines in 2023? Catch the real impact of the year's top stories. Watch the 2023 year-end specials only on the Business Standard Morning Show from 22nd to 29th December.
Hello and welcome to the Business Standard Morning Show. I am Ruchika Chitravanshi. It is 27th of December 2023 and here are the questions we will be answering today. Why has Disney failed to crack the Indian market? Did non-cricket sports have their day in the sun? EMs or DMs, where will the money flow in 2024? And what is Bhavish Agarwal's Krutrim? After months of build-up, Reliance Industries and Walt Disney have reportedly entered into a non-binding agreement. The plan is to merge Indian operations, which will in turn create India's largest media and entertainment empire, challenging the might of Sony, Zee, Amazon Prime and Netflix. But this merger in a way also suggests that Disney failed to crack the Indian market. But why? Tariq Ahmed answers.
On Monday, media reports indicated that television broadcaster Walt Disney signed a non-binding term sheet with Reliance Industries to merge their Indian media operations. As part of the stock and cash merger, the entire Disney Star India with 77 channels and all of the Viacom 18 operations, which have 38 channels, will come together. Also, two streaming platforms, JioCinema and Disney Plus Hotstar, are part of the deal. Reliance is pitching to be the majority shareholder with 51% in the merged entity, leaving Disney with the rest 49%. The merger is expected to be finalized by February 2024, subject to regulatory approvals. But Reliance is pushing for an earlier completion by January end. This year, Disney Plus Hotstar lost the digital rights of IPL, and its parent company, Novi Digital Entertainment, ended FY23 with a net loss of 746 crore rupees. That's a 118% increase from the previous year's losses. Disney-owned television broadcaster Star India reported a consolidated net profit of 1,272 crore rupees in FY23. That's a 31% drop compared to the previous fiscal year. Meanwhile, Viacom 18, which streamed IPL through JioCinema, reported a net profit of 11 crore rupees during the same period. This is Disney's third coming in India. The first in 1993 was through a partnership with KK Modi's group, but it didn't work out. Subsequently, it bought into Ronnie Screwvala's UTV, but that too faced challenges. Finally, on March 2019, Disney India acquired Star India as a subsidiary after a $71.3 billion deal with Star India's parent company, 21st Century Fox. Disney India now owns television channels of UTV Software Communications and Star India. However, the loss of IPL digital rights was a setback. The ongoing merger with Reliance Group indicates its struggles to establish a strong foothold in the Indian market. Business Standard's Vanita Kohli Khandekar explains why Disney fumbled at cracking the Indian market.
Disney has never done well anywhere outside of the US that much, except for China. China is one place where it has done well because it was about theme parks and cruises. But wherever Disney is, Disney has to serve its own products, its fairy tales and Marvel books and mermaids and princesses. Disney does very well. But whenever Disney has to localize, and India is a deeply, deeply, deeply local market. 90% of what sells in this market, whether it's movies, television, is local product. So, Star was a foreign company, but it localized like this, Channel V, Star News, Kaun Banega Crorepati. They localize, and they localize not just programming, they localize management and thinking. Disney never did that fully. Its heart is never into localizing.
Investor enthusiasm for Disney's India business started depleting in 2022 after the company lost the online rights to stream the IPL tournament for 2023-2027, even as it successfully won broadcast TV rights.
Disney reacts a lot to what Wall Street does. Every percentage point up and down on its stock price on Wall Street decides things for it. Its shareholders are very aggressive and some of its biggest shareholders are very aggressive shareholders. So Disney has to react to them, and this possibly is a reaction to that. And Hotstar and Star have been getting a lot of negative press in the US.
Losing IPL rights triggered a user exodus from Disney's streaming app Hotstar in recent quarters. Disney Plus Hotstar lost 2.8 million subscribers in the quarter ending September 30. After the September quarter, Disney Plus Hotstar's paid member base dropped to 37.6 million from 40.4 million paid members in the previous quarter. Disney has been exploring a sale or joint venture partnership for its India business, which includes numerous TV channels. However, in a statement in November this year, Chief Executive of Disney, Bob Iger, emphasized that the company wants to stay in India. The impending merger raises questions about Disney's future trajectory in India. What lies ahead for Disney in the Indian market post-merger?
Effectively, with this merger going through, what happens is that Uday Shankar is back in charge of the Disney India operations that will be merged in all probability with Viacom 18. And one realization that we've been talking about in the industry is that it takes an Indian team to run an Indian media company, and that's something where Disney has struggled, and it's something where Uday Shankar over the years has really shown. Um, you know, he's uh, he's made a success uh, of the Disney operations in India.
Analysts indicate that the merger presents an opportunity for Disney to localize its content according to the Indian market and potentially create India's biggest entertainment entity. But they also anticipate some challenges for the merger coming from the Competition Commission of India, as Reliance has multiple entertainment businesses already under its umbrella.
Both the firms are reportedly expecting to wrap up the deal at the beginning of next year. Moving on, this year was good for Indian sports too. And we are not talking about cricket here. Other sports too had their day in the sun. With notable performances in the Asian Games, FIDE Chess Championship, and some other events, new talents continued to attract the attention of the country, and that of the brands too. Abhijit Kumar takes a stock of Indian non-cricket sports in 2023.
Notwithstanding the heartbreaking end of the World Cup, Indian cricket soared to new heights in 2023. The lineup, both batting and bowling, never looked so lethal. India is at the top in Test, ODI and T20 rankings. Brand deals during the year were also impressive as eyeballs garnered by the IPL reached an all-time high. While cricket continued to hog the limelight this year, other sports also came out of cricket's long shadow and had their day in the sun. And it was evident in the 2023 Asian Games held in Hangzhou, China. India finished with a record haul of 107 medals at the event. 28 of these were gold, 38 silver, and 41 bronze. In the previous Asian Games held in 2018 in Jakarta, India's medal tally was 70. At the Women's World Boxing Championship, India finished at the top with Nikat Zareen, Neetu Gangas, Saviti Bura, and Lavlina Borgohain, bagging gold in their respective weight categories. China came second with 3 golds. India's track and field golden boy Neeraj Chopra bagged a gold medal at the World Athletics Championship in Budapest, marking India's first ever gold at the event. Indian chess masters too spun their web on the 8x8 board, trapping grandmasters around the world. And in all this, an 18-year-old shy Chennai boy continued to be the show stealer. R. Pragnananda became the world's youngest player to reach the FIDE Chess World Cup final. But just like India's in cricket, his winning streak was broken in the final match against chess wizard Magnus Carlsen. Pragnananda's elder sibling, Vaishali Pragnananda, also scripted history by becoming the 3rd woman grandmaster from India. Archery also witnessed a golden moment when 17-year-old Aditi Gopichand Swami made history by becoming the youngest world archery champion in the Archery World Cup since 2006.
I think non-cricket sports have been doing well for quite some time. Athletes have come to the fore, especially the men's relay team. Individuals like Avinash Sable, they have shown the way. Chess has always been on its own without support even from the society or from the government. They have been excelling over the years. So I think overall every sport other than cricket has promised to move forward.
The medals and accolades also translated into financial rewards and attracted brand endorsements and investment in sports infrastructure. Various state governments also announced government jobs for some of the winning athletes. Experts believe that part of the credit for India's performance in various non-cricket sports goes to the government's Target Olympic Podium Scheme or TOPS, Khelo India program, as well as support from private companies. And the accolades brought by the sportspersons has also made the government focus on ambitious plans for non-cricket sports. India officially threw its hat into the ring to host the Olympics in 2034. Experts believe that if it is successful, hosting the Olympics will revolutionize the landscape of non-cricket sports. The event would not only provide a massive boost to infrastructure development but also inspire a new generation of athletes to take up diverse sporting disciplines. But it was not all roses for all sports this year. India's historically strong sport of wrestling faced a challenging time amid allegations of sexual harassment by some women athletes. The Wrestling Federation of India was later suspended by the sport's world governing body for not holding elections in time. Olympic bronze medal winner Bajrang Punia looked a pale shadow of himself at the Asian Games as he lost 0-10 to Japan's Kaiki Yamaguchi. The reason? Like a few other wrestlers, he spent the first 6 months of this year at Janpath seeking removal of Brij Bhushan Sharan Singh as WFI chief. Out of the 107 medals that India won at Asiad, just 6 were in wrestling. Of them, 1 was silver and 5 bronze. Expert also said that football underperformed this year.
It's a cycle. Always you will remember, you'll suddenly every 4 years you'll get some fantastic wrestlers or fantastic athletes. But here the controversy should not have impacted the other wrestlers. Those who were involved, I can understand they were not able to practice. They were kind of they lost direction in what they were supposed to do. Boxers, yes, boxers over a period of time they have lacked, because I think it is not that they don't get support from the government. It is probably lack of good coaches. For me, the biggest disappointment of 23 was the football team. Despite every effort from the federation, every effort from the government, which made sure that it goes and participates in the Asian Games, it failed miserably. So there is something hugely lacking.
Despite good performances, 2023 remained an average year for non-cricket sports in terms of brands and advertising. Samit Sinha, founder of Alchemist Brand Consulting, believes that big brands remained elusive for these athletes due to their low media coverage.
I'm afraid, the non-cricket sports didn't get the kind of recognition that it deserved. Because how much coverage did chess get? I think it was just like a one-day wonder. How much media coverage did our badminton players who were performing so well on the international stage get from media? Most people in this country, if you were to show them a photograph of our ace badminton players, or with again the exception of maybe a PV Sindhu or a Saina Nehwal, I don't think people would even recognize somebody like a Lakshya Sen, or people would recognize a chess player. So obviously, because of their unfamiliarity, and because of the fact that they're not faces that the general public recognizes, brands would be uninterested.
So, what needs to be done going into 2024?
I think, even brands, they have to become a little more adventurous, rather than stay and play safe with all the established names. Because, some of the biggest brand endorsers in sports are from cricket. And even within cricket, you'll realize that it's really a handful who dominate. I'm not even sure from a brand's point of view, while it may be a safe investment, how, in terms of ROI, how well it works for brands. When a player is endorsing, or any celebrity for that matter, is endorsing so many brands across categories. So therefore, I think the way this gap can be bridged is for brands to come forward and take a chance on some players who have excelled in their fields.
2023 has been a big year for India in non-cricket sports. The success at the Asian Games, triumphs in FIDE Chess World Cup, and the bold bid to host the 2034 Olympics signal a paradigm shift in the nation's sporting landscape. Although experts have pointed out that for more money to come into non-cricket sports, brands need to take a chance on under-recognized athletes.
This year turned out to be good for the equity markets too. It delivered strong performance in 2023 as they recovered from the recession fears that fed into the October 2022 trough. This gave way for developed markets such as the US to deliver up to 43% returns this year. However, as we enter 2024, will developed markets continue to attract investors' money? Or will emerging markets stage an outperformance? Nikita Vashisht explains in our next report.
When investors entered 2023, they expected an economic recession to hit the United States, a global growth slowdown, and dwindling corporate profits. However, what unfolded was the US economy staying surprisingly resilient, faster than expected easing in inflationary conditions globally, and equities staging a smart comeback in the second half of the year. So far in 2023, benchmark indices across developed markets such as the US, Germany, France, and Japan have outperformed emerging market indices by surging in the range of 27 to 43%. By comparison, benchmarks in India, Taiwan, Brazil, Indonesia, and China have delivered returns between 6 and 20%. In fact, EMs such as Hong Kong and Thailand has declined 16 to 17% in 2023. Going ahead, as investors reject their portfolios to prepare for 2024, will the outperformance of developed markets continue in the year ahead? The answer may not be that simple.
Liquidity taps have been already open with China, the Latin American, and the Central and Eastern European countries cutting rates as early as March this year. In terms of which countries are going to shine, remember liquidity is just one aspect, and there are other parameters like valuations, earnings, politics, which are equally important when we deploy capital.
A large section of analysts believe emerging markets may become the top investment destination for most investors as the regions enjoy better economic growth prospects.
In the past couple of years, the EMs have relatively underperformed, with steady strengthening of the USD and amidst global macro uncertainties. However, both these factors are likely to reverse now, which would be conducive for improved FII flows to the emerging markets.
Mutula expects India to see disproportionately higher flows due to strong economic and corporate earnings growth, strong capex cycle, and political stability. He also expects China to see flows on valuation comfort. That said, analysts at Morgan Stanley caution that China's tepid growth could weigh on emerging markets, and there is a risk that the country's economy could get sucked into a wider debt deflation spiral with ripple effects for the rest of Asia and beyond in 2024. It thus expect US equities to have better returns than European or emerging market stocks, especially if the US manages a soft landing. It is overweight on Japan, equal weight on the US, and underweight on EMs except India and Mexico. Overall, analysts foresee 2024 to be a tale of two halves, where the first half may belong to developed markets, with peaking of interest rates driving superior returns in the region. The second half, however, may belong to emerging markets, with the US Fed cutting rates and the weakening of the US dollar boosting flows into EMs. Today, on 27th December, global cues and year-end portfolio shuffling will sway the markets.
He's making plans for an early retirement. Business Standard.
Ola Electric IPO is also going to hit the primary market next year. Its CEO Bhavish Agarwal is upbeat about it. Meanwhile, Ola is also excited about a new AI initiative called Krutrim. It is a homegrown large language model. Ayush Mishra has more on it.
All AI models today are trained largely in English, and they can't capture India's culture, knowledge, and aspiration, believes Bhavesh Agarwal, co-founder of Ola. With that in mind, Agarwal recently launched Krutrim, the made-for-India rival of ChatGPT. In his words, Krutrim is a suite of multilingual AI models that are being trained on unique data sets specific to India. With the vision of a new era in artificial intelligence, the Ola CEO positioned Krutrim as a pivotal player in India's quest to become an AI-first economy. A move in that direction will include engineering cloud architecture for optimal performance in Indian context, creating novel models like healthcare, drug discovery, agriculture, education, etc., beyond large language models, and making applications for enterprises as well as consumers. Krutrim was unveiled during a hybrid event broadcast live on YouTube. The Sanskrit word Krutrim translates into artificial in English, and Agarwal highlighted that the model possesses the capability to comprehend 20 Indian languages while being able to generate content in 10 Indian languages such as Marathi, Hindi, Telugu, Kannada, and Odia. Krutrim is also a large language model trained on a data set containing over 2 trillion tokens, which represent subwords used in conversations. Krutrim reportedly outperforms models such as GPT-4 and Meta's Llama in benchmarks assessing Indian language comprehension. Additionally, it can process voice input and provide voice responses similar to the latest version of OpenAI's ChatGPT. While Krutrim is still a prototype, Krutrim Pro is being promoted as a more robust, multimodal model designed for enterprise applications, which Ola is set to introduce in the upcoming quarter. Starting January 2024, individuals will be able to register on the Krutrim website to access the chatbot. Additionally, Ola is set to introduce Krutrim APIs in February, enabling companies and developers to seamlessly integrate their products and services. Krutrim will also work on the development of proprietary chiplets and other hardware designed for AI applications in data centers where the language will be deployed. According to Agarwal, Krutrim will function as an independent entity distinct from Ola Cabs or Ola Electric. However, he acknowledged the possibility of collaboration among the three entities in terms of sharing and leveraging data resources.
I will achieve, I will fly high. TMS
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
The ride-hailing firm is also planning a pro version of the AI model. It is likely to have complex problem-solving abilities. Clearly, we are in the midst of an AI race now. That's all we have for you today. For more news and analysis, please log on to business-standard.com. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.